Andrew Woodward here from the Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 69. And today we're talking about this article here, the surprising retirement reality for Gen Z Aussies. Now, I know the majority of my audience are not necessarily Gen Z, but I think there's some pretty interesting and exciting information in this article that can be relevant to everybody and not just our Gen Zers. But basically what they're saying is that whilst millennials and Gen Z Aussies might be locked out of housing, there's one area of their economic life where they are in a much better position, or prime position, according to this article. And so let's cut to the trace. What is it? Well, it's actually retirement. So there it is there, retirement. And what they're basically saying in this article, I won't necessarily go through line by line, but what they're saying is that with Australia's super guarantee requirements and the fact that they are growing consistently up to 12%, so we're on the path to getting to 12%, the fact is that Gen Z and Millennials will have the best opportunity to put themselves in a strong financial position in retirement because of the compounding of those significant amounts of money over a long period of time. And to an extent, they're right. But there is a word of caution, and it's something that I've been talking a little bit about. I did a TV show, The Investment Insights on Ticker. I did a show talking about this fact, and I'll get to that in a minute. But putting that super guarantee into investments and allowing compounding to do its thing obviously is going to accumulate over time to a great result. And in here they're saying 33% of millennials say they would have between 0 and 10,000 in retirement savings without compulsory super. And I mean, that should not be a surprise to anybody, because when you're young, the last thing you're thinking about is putting money aside for retirement. And despite the fact that there are tax incentives available to do so, it's just not something that people are doing over and above that guarantee. And the flip side of that is, if the guarantee is there, whilst you're young, why would you necessarily be thinking about putting any additional money into super? So I think that only 33% say they'd have between 0 and 10,000 without the guarantee is probably on the low side. I would have thought it'd be closer to 80 or 90% of people would be saying, well, I wouldn't be putting money into super knowing that guarantee is there. And if it wasn't there, then clearly they would have to do something better to support themselves, and therefore you would hope that number would be a lot higher, and that people would be saying they have more money in their super. So a little bit of a circular argument there in terms of how much they would have. But the fact is that with high interest rates at the moment and high cost of living, then the ability to put money into super beyond the guarantee for millennials and Gen Zs is very, very difficult. And I get that. And I guess the point here is that with the housing market being so tough for younger people to get into, if they can't get into housing, then they're not necessarily going to have any spare for putting into retirement planning, and that's clearly very, very evident. And then the bit that I wanted to come back to, and as I said, this is the bit that I did the episode of Investment Insights on, was the fact that the Association of Super Funds Australia estimates that a single person needs $595,000 put away in super for a comfortable retirement, and at age 67, couples need $690,000. And so when I was doing the research for the TV show, I actually looked into these numbers, and there's something in there that is particularly frightful for those people who are relying on this association estimate for their target, because at $690,000 for a couple, the allocation for travel in a month is $38. And so if you're planning on traveling anywhere in retirement, $38 is not going to get you all that far. In fact, I had a client say to me the other day that $38 just means that they're going to need to live on the Opal network. And for those not in Sydney who don't have, your network might be called something else, that's the public transport network here in Sydney. And so basically for $38, they might be able to go on lots of train trips in the month as their travel based on that form of budget. So I think the important thing that I wanted to draw from this article is that the target for a couple of 690,000 or an individual at 595 may not necessarily be the word they've chosen here, retire comfortably. I think that is probably an overstatement or an exaggeration of what that level of money would do in retirement. And if you're somebody who wants to pass some money on to your kids or to somebody else in your life, then that level of money is not going to last all that long in retirement. And one of the questions that we can never answer, nobody's found the answer to this one yet, but is how long are we going to live? And therefore, how long does that money need to survive? So I'm very much, at the Investors Way, we're very much about doing more than just super, so that you have the ability to have choice and that you have more than what your super contributions are going to provide for you in retirement, and shoot for a number way beyond 690,000. Now, I get the premise of this article is that for Gen Z and Millennials struggling to get into the housing market, that trying to grow their wealth is difficult. But we also need to be mindful that these interest rate levels and cost of living pressures are slowly and surely going to turn around. We've been talking about it on these weekly wisdom videos for months, about interest rates and inflation. And in preparation for this weekly wisdom video, I saw a story that I was going to talk about, but I want to see some more evidence before I make it a point of it. But it was talking about that rental market. We've seen a decline in rental prices in recent data. And so with that decline in rental prices, that will ease some of the pressure in the housing market, but it will also ease it will ease pressure on inflation, which will ease pressure on interest rates. And with the more recent interest rate data, heading towards the RBA's target zone, this is great news to hear that potentially rental market is declining, and that will then provide a runway for when the RBA can start to cut rates, take some of that pressure out, and our Gen Z and Millennials can start using some of that spare or newly available cash, one, to get into the property market and help grow their wealth through property, but also think about other ways they can utilize that newly freed up cash to grow their wealth, whether it's property, stocks, or cash-based investments. We want to get some money invested outside of super because, as I said, I don't believe that these numbers are going to provide the type of lifestyle in retirement that most people would consider comfortable or something that they desire. So well and truly look towards growing your wealth when you can. And as always, if you're watching this on YouTube, hit the subscribe button up there and the little bell next to it so that you get notified when they come out. And if you're watching on Facebook or LinkedIn, hit the like button. Leave us a comment. Let us know what you thought or what you're thinking when it comes to your retirement planning, and share it in your network so that more people get to understand how we can interpret the information that's out there and use it to our advantage to grow our wealth. And I think the single biggest message that I want to take, or want you to take from this article, is that despite the numbers and from the Super Industry Association in terms of what's required for a comfortable lifestyle, do whatever you can to accumulate more than these 595 and 690,000 numbers so that you can have a more comfortable retirement than what would be provided on those numbers. And for our Gen Z and Millennials, I know there's not a lot of you that listen to this, but we do have a few. And the good news for you is that increasing super guarantee levy that is being put aside every week, every month from your earnings is going to help accumulate large numbers. And obviously, as inflation kicks in, these numbers of 595,000 and 690,000 are going to increase. And so we need to continue to shoot for the stars. So shoot for a seven-figure number and take advantage of the tax incentives when it comes to super, if you can, obviously, and get as much money working for you for as long as it can, so that you're in a much more secure position when it comes to your retirement. If you want to have a chat about how to make all that happen, leave us a comment, send us a message, get in touch however it works for you, and we'd love to have a chat and see what we can do for you. So that's Woody's Weekly Wisdom, episode number 69 for this week, all about the super guarantee and how it's helping Gen Z and Millennials be in a better position than their predecessors who may not have had that guarantee for the full length of their working career, and how I encourage you to take advantage of the super scheme to improve your retirement position. Have a great week. See you again next week. Cheers.